we restructured the budgets and expenses and set up the building in some ways where we could essentially bring some costs down without compromising service. We improved net revenues within 4 months by 60%, 60.
Hi there, I'm Matt Stahl, and welcome to the Super Prime Property Show, where we discuss the world of super prime real estate by talking with leading designers, architects, developers, and agents. This podcast aims to explore the intricacies of the industry, delving into conversations that hopefully inspire, inform, and entertain. Before we get started, please could I ask a favour? If you're not already, could you hit the subscribe button and give us a follow? You can find us on Instagram at Super Prime Property Show. Thank you. Today on the show, we have Jamie Cozens, who is the Managing Director of Anglo Fortune Asset Management. Anglo Fortune provides hassle-free, super prime real estate investments to the ultra-high net worths of this world. So not only do Anglo Fortune source the deal, but they also develop it, they then let it and manage it. The whole life cycle, all on behalf of their clients. And in just 4 years, they've grown to £200 million of assets under management, which is pretty impressive stuff. Will be very exciting to hear from Jamie how on earth they did it. Jamie Cozens, welcome to the show.
Thank you.
So, Jamie, you are the Managing Director of Anglo Fortune Asset Management.
Mm-hmm.
Now, for those who don't really understand what that means, and I didn't when we first met, it basically means, and you are a bit unlike many other asset managers out there, that you will essentially deliver a project for an ultra high net worth from the day you find the deal, from inception to the day that it is almost disposed of at some point potentially, and you'll take care of every process along the way. In a totally hassle-free way.
Yeah, I would say that's a fair summary of what we do. I think really, I don't know if it's worth me giving you a little bit about sort of why we do that.
Yep.
Because really it was born out of, the business was founded, I set up the company back in 2017, and it took a year before it really became functional. That was quite a difficult time, as I'm sure you can imagine, because we didn't really know if the company was going to take off, but it was built around an opportunity. Hence, that's the sort of, as the summary you gave, that's why we provide those services. So to go back to 2017, there was quite a complicated deal in East London where some now clients were engaged in a deal that had got a little bit complicated, and it was a little bit tough for them to know what was going on. Most of our capital, as you know, is from Far East Asia, and it sort of got a bit out of control, and we were not involved. And we had somebody reach out to us who sort of knew us and knew the team, and said, "There's a bit of a pickle unfolding in with this development off-plan purchase in East London, and would you be able to help?" And we got into the weeds really from 2015, 2016. But it was really 2016 and 2017 when that started to pick up, because it was nearing completion and as I say, it was quite complex. And I can't sort of go into too much detail, but we were there to try and unpick the mess.
Yeah.
And that was what we did. And it was on behalf of a couple of clients from Far East Asia. Some of their money was out in deposits, and we had to try and recover the position, and that was what we did. But really, through going through the weeds and through that process, what we realised was the skill set within the team and my skill set had really been around residential investment in London, running portfolios, and understanding how that process works from sort of start to end. So the opportunity was to build it. If we made a success of recovering that transaction, was to build a business around, okay, well, how do we help other clients do this? How do we help them deploy capital perhaps a little bit more carefully, but also into the right assets? It's a market we know really well. I worked in London, in the London real estate market since I was 17. And how do we manage and deliver each stage of that process, from really, as you said, inception from raising the capital or sourcing the acquisition, all the way through to the management, the leasing, and ultimately the disposal. And how do we maximise the outcome and do it really, really well?
And how do you deliver value at each of those stages, which is unique to do that at every stage?
I would say so, and I would say it puts us in a sort of space within the market where we're set up for a certain type of client. It's very hands-on for us. We operate like a fund, really, although it's termed in the market segregated mandate, but ultimately we don't have discretion over when the funds are deployed. But we raise the funds in an agreement with the client or the capital, and then we help them deploy that over a sort of an agreed strategy. But adding value each stage is really kind of the whole purpose of our existence, I suppose.
Yeah.
And it's why we've sort of managed to survive and grow and do well within our little corner of the market, is because the experience, my understanding from the communication with the clients and others really, is that their experience of dealing with traditional agents as, I don't know what you'd call them, they're sort of a mid-tier pseudo-institutional investor. They're not the private capital, the family office, but they sort of don't have a specific basket other than private office.
Yeah. What's the average, what kind of amount of capital would the average one be looking to deploy?
Our sort of ticket size is 20 to 100 million. Once it goes north of 100 million, it tends to be larger institutional capital.
Yeah.
Traditional.
Is that ticket size with debt?
But a lot of our assets are actually debt free. But
Okay.
yes, yes, it is. The answer to your question is typically we're looking at really sort of the 40 to 60 million seems to be the sort of sweet spot. But yeah, that's our range. But what that means is with the experience that they seemingly had with agents is that they're not Blackstone or Aviva or KKR. So they don't take precedence within the portfolios and the operations of some of the bigger sort of well-renowned businesses that everybody knows. But they're also not Mr. and Mrs. Smith that own a couple of two beds, across London. And it felt a bit to me, the opportunity sort of seemed to present itself in that they didn't seem to have a sort of home where somebody was running their capital and running their assets with an institutional hat on. There's a proper structure reporting. There's a lot of autonomy in the way we do it. They rely on your expertise to make the decisions. They don't want to be making the decisions. And they either don't get the right level of attention at some of the bigger businesses, or if they go to the smaller businesses, the individuals or the agents really are calling them asking whether or not they want to change a tap.
Yeah.
And they're 8 hours ahead.
Yeah.
And for them, it seemed to be driving them berserk, and nobody was paying the right level of attention. So I think what we've tried to do is really service that, where they, to us, are a Blackstone or a KKR or whoever else it might be.
Sure.
And we obviously take that. We're very proud of that. We also take it very, very seriously. And it's great being able to take real care of what we do for them.
Sure. And they get a trusted personal service in return.
Yeah. I think with my team and the way we've kind of built the business over the last, what's soon to be 6 years, to me, the word I always hammer home internally, and I don't want this to sound like sort of business waffle, but I really mean it, is values. And for me, it's if you make your decisions based on, if you have the skills first, and then your decision-making process is based on the right values, you can't go too far wrong as long as those two work in harmony. And I was raised with my household growing up. I was raised with a very, very strong sort of moral, values-based mindset. It was always about principle. It was always about treating people right. It was always about being honest, and that sort of carried through. And I've sort of built the business with the mindset that if you always make the best decision you can with the knowledge available to you at the time, based on the right core values, and you're honest and trusted, you'll always be invited to the table to do business.
I don't know go far wrong, can you?
No,
on those basis.
And I don't know what the company will become. And obviously, we have our aspirations for our futures, but I think you'll always be invited back to the table, because I think
Sure.
if somebody knows what they get with you, they get somebody who's, yes, capable and talented within their markets, and that's us as a business. But they are also honest, trustworthy, hardworking.
Yeah.
I think people do want your input to see how you can help them solve their problems, and
Yeah.
that's kind of the reputation we're, I think, building. So yeah, it might be a bit of a long answer to the question, but
I'm glad you mentioned your upbringing. So let's just go back to that quickly.
Right.
So how did you get into this? How did you get into firstly into the property sector?
so as many sort of the path many people follow, family have connections to real estate.
Yeah.
My grandfather ran a builder's merchants in South London in Putney. My father was born in Putney and went on to he's had a fairly interesting career. He was one of the first people to go out to Asia, Hong Kong, with new developments on behalf of the big developers in London in the early 90s.
Okay.
He's
Is that commercial then?
No, resi.
Oh,
All resi.
okay.
Yeah, you know the sort of hotel exhibitions
Yeah,
they do.
yeah.
He was one of the
Yeah.
first that sort of went out and started.
He's a pioneer in that,
I
Yeah.
would say so. He was one of the first for
Yeah.
sure, and there were a couple of others doing it. And he built a company that was based between London and Hong Kong primarily, where. That was kind of the model, and then obviously the bigger agents started doing that.
Certainly did.
in time.
It's gone roadshows.
Yeah,
don't
yeah.
they? Or they still do, I think.
They still do.
Yeah, it stopped for a bit, it seemed, but like
did.
it's very much back on now. I understand.
Yeah, I would say so. And before, I mean, they all now have sort of satellite offices or pretty significant offices out there. But back then, it was the road shows and that was kind of what they did. And he's sort of been involved in everything from development to the transactional side with the Far East, which is it was definitely where the link to the Far East comes from. He lived out there for a period of time, and he's been involved in some really interesting projects. And I always had exposure, and I've always had a really, I've always been very commercially interested and motivated since a young age. So I was always very motivated to go to work. That was what I wanted to do. My path was quite clear. I always wanted to go and build something, even from a teenager, 14, 15. It was pretty clear that was the path I was going to try and take. And I think a lot of that is sort of echoes of him, I suppose, because that's what he did. And he went and built, I mean, obviously they're nuanced and different, but that's what the path he took, and I saw what he made of it, and I guess it was quite a comfortable reference point as well. So when I was 15, I used to go and do flyering for agents up in the city, and then when I was 16, I got a Saturday job, and then when I was 17, when I passed my driving test, I got a full-time job up in Canary Wharf, actually.
So no uni.
No,
straight
no
into
uni,
work.
no college. Yeah,
Went
straight in. Knew what I wanted to do.
That's brilliant.
And I don't know how much forethought I had, because you sort of create your own memories over time of what happened at the time. But I recall thinking that I knew I was more commercially motivated than academically motivated. So I was very lucky. I went to a lovely school in Surrey, grew up in Surrey, and academically did fine. But I was very motivated to get into the working world. And I seem to recall at the time thinking, if I go and get 5 years, say, experience from 17 to 22 and have a good reputation and succeed and I'm backed up by my own metrics. If you were to sit me next to somebody that's just come out of uni and done
absolutely
a real estate degree,
yeah,
for me, there's no real comparison in terms of who you pick to put into a position of responsibility. One is fact-based, one is a bit more hypothetical. And I don't know how much more than that I sort of thought of, but I do remember really clearly thinking that, and I was like, I'm just going to go and learn.
For a career in property, I always say the same thing. Like, for me, a period in agency is actually one of the best springboards into it, because you just understand the principles of valuing property. You understand the principles of price per square foot, values, how they change. You understand the psychology of sellers and buyers, and all this is what plays into all the different sectors of property, no matter where you end up. You know, if you end up in construction or you end up in asset management, they all are interwoven into it. And it's the best starting way. And then, of course, you learn about the difficulties of conveyancing. You learn about all the other pitfalls that you could, that you come across in property, financing.
And I think we specialise in the London market as it stands. We have a broader capacity, but that's our specialist area if you were to pick like a location. And then London actually isn't a location. It's made up of many micro locations that behave very differently. And I think the exposure I had from working in different parts of London, cutting my teeth in difficult markets. I started in 2008, my reference point to...
In Canary Wharf as well, right?
Yeah. But I didn't have a different reference point. So it actually set a very... I think it made me quite resilient, and it gave me quite strong work ethic, because my benchmark, my reference point was a real headwind of a marketplace, and that to me was normal. That was the baseline. So I remember sitting in the office.
Very different to 2005.
Yeah, exactly. And I remember sitting in the office and people would make these remarks, and they were much older than me, and I was listening to what was going on, and people would make remarks about, how hard it was, and God, how much easier it was, and how the deals used to just walk through the door, and they sort of seemed a bit like put out that they had to work, and some of them were really good, but they weren't. It sort of walked through the door a lot of the time. So what I see as a blessing. I'm an optimist in my nature. I see the positives in everything, or I try to find the positives in everything, I should say. I am very grateful for that sort of that process that I went through that set expectations, because it makes you more resilient, makes you, I think, better work ethic. You have to solve more problems than you do when it walks through the door. Sure. And look, I was also 17, 18, 19. I was dicking about doing all kinds of stuff at the same time, and I was still very young.
Yeah.
But it was still a great learning experience.
It also teaches you how to graft.
It does.
Which is key. So then how did you transition from being an agent into asset management?
So I spent 5-6 years with a high-level premium London agency. It's John D. Wood.
Okay. And in Canary Wharf?
No. This is around here, actually. This is Parsons Green. I was over in Battersea. I was running different offices.
Yeah.
And the role really became broader than just the transactional side, because we had quite a big portfolio of investor clients that were sort of what you'd call multi-landlords. They own a few flats here and there. And what I think the company had sort of figured out, which is I totally agree with, is it was way better for them to have a central point of contact than it was to deal with the different offices. And so I got quite involved with that sort of stuff. Okay. So from running offices and overseeing kind of the broader life cycle of property ownership, leasing, all the rest of it for individual landlords. There was also the part which was, well, how are we going to really service some of our more valued clients, because they own more property, because they weren't really being serviced. So that was something, or they didn't really have an individual service for that.
Did that involve then literally helping them find investments?
Yeah, it involved everything in the life cycle, really. But a lot of it was keeping them happy, reporting, single point of contact, making sure that properties were leased correctly, whether that's terms or income, making sure that things weren't missed, because people do have a habit of missing quite a lot, because they're
for example, you'd say to a guy who likes to buy flats up and down Fulham, you'd say, here, here's a flat, potential for a loft conversion. Then you check that perhaps they had the freehold included, or the lease included the rights to the airspace in the loft, and then you talk a bit about planning, and the whole element, how would you finance it,
and in that came a learning curve, because that wasn't my day to day before that. So there was, I think it got more interesting, it got a bit more complex, and I started thinking more broadly. And as I said before, I had quite a clear aspiration to go and build something. And as I saw you sort of peel back the layers on the different parts of the business and the sector, there's more complexity, there's more opportunity, really, through all the stuff that you're trying to do within the life cycle. So I quite liked that. And I think, as is often the case with business, I think then there's a an opportunity that often comes out of happenstance, right? It's fortuitous timing, and that's sort of what happened. And I was introduced to moving on slightly here, and stop me if you want to, but the link is to, well, how you asked me, how did I transition into asset management, investment, and asset management? So from the increased responsibility with John D. Wood and from the sort of success and traction I had there, I then started to think about, well, how could I build something around this skill set, but that thinks bigger and is more broad. I want to start looking at developments rather than apartments. I want to start sort of leveling up, really, taking it to the next sort of level on a scale perspective. And I was introduced to Kin, who heads up the Singapore side of the business. And he was doing some interesting stuff in the commercial space, which is largely the mandate of the or the remit of the Singapore office, and London does the resi stuff, and it's sort of a partnership. And I was introduced to him. Residential deals were the capital that he represented started having a real interest in the resi space, and I basically said, look, I'm here, I'm on the ground, you're 6,000 miles away. This is what I do, this is what I've done, this is my skill set and experience.
Saw an opportunity.
And said, look, why don't there's an opportunity here for everyone, and I pride myself on being, trustworthy and hardworking. So let me get cracking, and I'll build something that serves the clients really well, and allows us to grow something alongside their sort of their growth of their portfolio. So that was what we did, and that was 6 years ago.
Okay, so then in that 6 years, and we will get in a bit. We'll get onto the whole process that I think you go through, for each of your assets. So I think that's fascinating. The variety of skills that you need to take it through. But so in that period now, so how many in your team?
We're 11 in total.
In the UK?
Yeah, all in the UK. Well, actually, there's a little bit of split time. So there's 2 in Hong Kong. Okay. But they come over quite a bit. Yeah. But yeah, and that's more sort of finance back office. But yes. Yeah, okay. There are... so there's 11. So there's 11 of us in total. Yeah.
And you're in the city?
Yeah, Moorgate. Office in Moorgate. But spend, as I'm sure you do, on the road a lot.
And you gave me a tour of your Mayfair development, which I was pretty impressed about. That maybe tells a bit about it, but that one is 3 beautiful terrace houses knocked into one block,
and then the Georgian building on the side,
and
which
the Georgian
is listed,
building on the side, yeah.
But thank you. That's
tell us a bit about that one
from you, so I appreciate it. This is a fun one, and I think it was sort of testing the mettle of what we built over the last 4 years at the time, 2021. And probably the most exciting project I've done to date. But also, as I say, it was a test. But yeah, the way that worked, and it serves as quite a nice reference for me in terms of what we've achieved. It was a really nice crystallization of what we've achieved over the last 5 years. But to save waffling on about that and tell you about the deal itself, we were given a mandate by an existing client to really look for something that was a sort of a grade A tier 1 legacy investment.
Far East client?
Okay. This was during COVID, the latter stages of COVID. He'd spent a lot of time with family, had given a lot of thought to the future, I think. He's in his late 60s, early 70s now. Very much family man, wonderful individual. And he sort of said, look, I would like to look at something which is really a legacy investment, something we can hold for a long time. Yeah. Obviously, it still needs to be underwritten by the same sort of financial principles that we operate on. But let's look for something. And I said, well, give me some time to come up with the right thing. And that's one of the nice things about the way we operate is we're not in any way an agent. We're an investment management company.
So you went out hunting.
Yeah, and I probably look at, on behalf of the capital we represent, I probably look at 50 to 60 deals a year. Okay. And I recommend 4. or 5. And this is where
existing clients.
Or new
potentially new
capital, but
clients.
obviously that's the potential opportunity to grow. But that's in terms of like a standard operating procedure. That's kind of what we do, and we look for the gems, often the unpolished gems, and see what we can do with them. And what that means is that goes back to what I was saying about operating kind of like a fund, is that we think in the mindset that we're deploying this capital, and because we're involved in the life cycle of the asset, there's no hiding behind the transaction.
Absolutely.
Because you're responsible for the delivery, so you have to have alignment with the client, otherwise you'll fail.
Yeah.
Which I really like, because it keeps everybody honest. But yeah, so we went out looking for the right deal.
And how do you source these deals, just quickly? What's your
normal? Exactly what you think. So we work with big agents, we work with small agents, we work with receivers, we work with agents that specialise in receivers, we work off-market transactions, other family offices, through law firms. So we, because again, this is a real testament to the reputation I believe we as a team have built, is that there is a really positive trajectory of the amount of stuff that we get that is not in the public domain or the open markets. And that's not because there aren't lots of people that do similar things to buying developments.
Yeah.
It's because people know we do what we say we're going to do. We represent really good capital that is very... we're very privileged to work for it, but it's not complex capital. It's very straightforward, and that's really, really nice. And because of that, people now come to us more and more and more and say, would you look at this? And often it's people that don't really want the transaction to take place in the public domain.
Yeah, of course. Well, we just say yes. Just a few days ago, we had Bertie from Russell Simpson, who's the MD at Russell Simpson. He was telling me now recently, pretty much 80% of transactions over 10 mil are now off market.
I can imagine.
Which I was pretty shocked about.
It's a huge number. I didn't realise it was that high, but I know it's an awful lot.
Yeah.
And I think I don't see that necessarily changing in the short term.
He said they had 1,000 as well, over 1,000 buying agents on their books. He said the amount of buying agents has just rocketed in recent years. There's people, the value's going so crazy. Nobody wants their properties on Rightmove or what, they want the floor plans all over the internet.
And a lot of it is about discretion, and you can understand why. And again, just to look back slightly, but the capital we represent, that they're not real estate investors. That's not their primary motivation. So they do other things. They run other businesses, and it's diversification, and it's store of wealth, and it's all of and it's kudos in some cases. They want to be in London or wherever it is. So, they don't want all of their investments in the public domain, and that's totally reasonable, right?
He was also saying what I thought fascinating was that, even if the rumors, for example, someone might be selling and they'll be saying, "Oh, why is that person selling? Are they selling? Are they leaving town? Are they, have they sold their business? Are they, is it all these, extra factors that can play into it." So
people start to create their own stories of what's happening.
They really want things to be discreet, and discretion is
it's a huge part.
Huge part of it.
It's a huge part, and it's a part we take very, very seriously.
Yeah. So let's talk about the Mayfair deal. We can.
Sorry,
so I've gone off again. So where did you source that?
So that was actually big agent, but off market. So they.
There's not many people who can afford to buy it.
No.
Let's be real.
What they did was this is the where it was a real compliment to us, was they basically handpicked. So it was Grosvenor that was selling.
Okay.
And Grosvenor don't transact with fools. They're quite cautious about who they, rightly so, who they do their
they don't want to waste their time.
No, they don't want to waste their time, and they don't want to also, for them, I believe there's a PR component as well. They need to be trading with legitimate buyers. And they have to be a little bit careful, which is the same as lots of big landlords. But it was Knight Frank that were the agent. I have a good relationship with the team there. They were fantastic through the process, but they came to us and said, we've got this opportunity.
Who was the agent?
At Knight Frank, Guy Stebbings and Lloyd Wraith.
Okay.
Nice. But they've and Harrison, all the guys. That team are a really nice bunch, and I've known them for quite a long time now. And we actually, part of this, I guess our credibility with Knight Frank for this deal was we'd done another one before, in near Chancery Lane.
Okay.
So they knew us.
And
anyway, so they went out to a short list of people they knew could perform and that it might suit. and I think there were about 12 or something in the list, but it was, again, very discreet. That was the sort of mandate. And then there was a process.
Yeah.
And there was, obviously, we did all of our sort of financial modelling, and we saw there an opportunity. Sorry.
Yeah, but it came on as an unbroken block.
Okay, well, no, well, yes, it did.
Yeah, well,
so to give you the facts, I suppose, it's a development under one freehold title of three, used to be offices, three residential, three townhouses, but they were knocked together in the centre to make apartments. So it's got a central stair core.
Okay.
And then on the side of that, there's a listed Georgian building, which is 300 years old. So,
okay.
That was what we were looking at. That was under one freehold title.
Already subdivided.
Into the apartments.
Yeah.
Yep, into the apartments, yeah. And we could see that the location was awesome. You're right by Grosvenor Square.
Yeah. Quiet street.
Yeah, quiet street. Nice and discreet again in that sort of sense.
Yeah.
But it ticked so many boxes. And when somebody says to you, go and find me like a legacy investment, I mean, you're what, a stone's throw from Claridge's.
Yeah.
I knew at the time when I first saw it, it was April, and I remember pulling up over the road and I thought, this is beautiful. And after I came out, I think I pretty much said out loud, under this instruction, I'm not going to be able to do better than this. It's all about where the commercials come into it. But yeah, so it was essentially 23 apartments, really tired, refurbished to a pretty vanilla standard 20 years ago. So it was an unpolished gem to a degree, and there was part of the opportunity. But then there was, if we behaved well and we had the support of Knight Frank, or they could give us sort of a vote of confidence that we behaved well in the past, there was a potential to do a really nice deal where we sort of, I guess, helped Grosvenor in a way by making a simple transaction. And that's what we did, and we exchanged in 10 days and completed in 21.
Right,
which was...
that all cash then?
Yeah, well, it was all cash to do the deal, and then from that point became the stuff you're more familiar with, which is the design and viability assessments in terms of what we could do with the units and how do we maximise the values. We bought the development for under 2,000 a foot, which I thought was I would struggle to repeat that there, but great. Success. So we were very comfortable with our entry point. And then it was about how do we make the most of the asset and how do we turn it into something that will hold its value, something that is well presented and looked after, but also something that performs well commercially. And it was. Then we went through a design and sort of construction phase. Looked at what we could do with it. Started the work in. We kept the occupancy in there. There were private tenants in there. So
on normal ASTs.
On normal ASTs.
Okay.
Worked with all of them.
Some income coming in.
Great with some income. Yeah, which was part of the strategy, to be perfectly honest. When we saw it, we thought we can look after all the tenants in there, make sure we retain the income. Means we don't have to make any really quick decisions on what we're going to do with it. Let's get it right. Yeah. And we went and built relationships with all the tenants, so they knew what we were going to do, which I think went down quite well, and they grew closer to us over the year and a bit they were in there. But we always told them what the long-term plan was, and in 2023 at the start in January the work started, and so we actually did it in phases so that we could retain some of the income. We phased it through the building, so we did it in 4 phases. And I think we had some great people on board to help run the project. We worked with fantastic construction specialists, designers. We project managed together, but my counterpart in the project management side of things was, he's many years my senior, but he was responsible for the concrete frame of the Shard, the refurb of Claridge's, the Savoy, Connaught. He has a real CV on that sort of stuff. So I'm very lucky to know him, met him through my father. And as a result of that skill set, and as a result of, at one point I was basically living on site to monitor the construction works, to make sure everything was being executed properly and pushed hard. we completed it in a year of very high inflation and high interest. We completed it on time and on budget.
Great.
Which I'm not entirely sure how that happened, but we did, and I think it all, the devil was in the detail, right? And it was all about really close attention to detail.
I think it's important to note as well, like in that development life cycle, there are several stages of risk, which not everyone is equally good at the different stages. First of all, you've got the acquisition through, so you managed to acquire a prized asset, from a serious seller who's very well connected. So you got that through. Then you've got, the many whatever permissions that you needed to get that through, not to mention dealing with the financing afterwards. Then there's also the construction risk, or they call it the development risk, which is also wrought with problems. And then obviously at the end of it, letting it all. And what's the model that you use for letting?
So we work a lot.
It's 23 units,
23
right?
units.
All
one's actually
two
sold,
beds?
One's actually sold off on a long leasehold.
Okay. By
Not
you?
No,
separately.
not by us, not by us, no. So that was just something that was inherited.
Yep.
The leasing. So what we do, also a niche that we've sort of fallen into in many senses, but it's worked really well for us and most importantly our clients, and that is that we work a lot with what are known as corporate housing providers. So they will look after, they will be quite sort of location specific. So for example, we in our development in Canary Wharf, we have a partner. We almost see it more like a JV than a tenant landlord, because it keeps everybody aligned, and I like that alignment, and if we perform well, everybody does well. So in that location you have people that will look after your traditional professional services companies. So you have the KPMGs and Deloittes and Ernst and Youngs, and then you've got your law firms, and then you've got your whoever else it might be, but very much professional services, insurance companies over there. So they will specialise in providing accommodation in the medium term. So they normally have teams that come over for 3 months, 5 months.
Travelling execs
And travelling grads that are here for projects, for, or a seat in a different team or whatever it is. So it's like a medium term form of occupancy where...
So but at short let values, almost like the short let market.
You sort of, there's a middle ground.
Okay.
So
between
you're not,
short let and long.
Because you're not, and it's not something we want to do, and it's something we're quite cautious about how we steer clear of. We don't really do leisure. We're not like here for people that come in and want. It's not a hotel. And it's a residential building, so it can't be. So the way we run the portfolio is they call it like extended stay, but it's really a midterm. And what you end up with is, for example, KPMG. Let's just take a sort of almost a case study. KPMG will have a contract with a housing provider, and that housing provider will need to have the capacity to house their employees, travelling employees, in many European locations, for example, because they solve that problem for them. They don't want to deal with...
KPMG will be your tenant, essentially.
They will be the subtenant.
They'll be the subtenant.
Yeah, we have a lease we use rent revenue models and leases, but we have a lease with the operator, who is an institution. They are a company, that is a corporate let.
Yeah.
And what they will then do is they will have a contract, and normally they're exclusive, and it will be... So-and-so looks after to
provide
KPMG, provide that service, and the problem they solve for like a KPMG is they call them and it's a one phone call and they sort out all the accommodation.
If they want someone in Paris or they want someone in Berlin or London, they've got places for them.
Exactly. And that's why a lot of our assets, with this model that we've sort of built, a lot of our assets are in business districts.
Yeah, okay.
Because that is where this type of accommodation is required more frequently. And then you get a surplus on your rents, because what they will do is they will have an agreed contract, for example, with KPMG. There are many others, and I don't know exactly who's working with KPMG. So for the purposes of being unbiased or whatever the right term is.
It was an example.
Is an example.
Yeah.
But they will have an agreement with our partners to say, when we have people in this city, we pay you this much per week, per month, per night, whatever it might be. And we sort of, in a way, built the business around that. And really the value we add is that we... where we add value for the clients is through the spread, which is reputationally, and because of our part. The manner in which we've executed the transactions, we're trusted. So we have opportunity to enter at a slightly lower price point than others. Now, we're obviously not the only ones with that opportunity, but the opportunity's there. We have a very, very, because of my experience in London, we have a very, very granular understanding for value in London, down to micro locations and types of units and all the rest of it. So there's call it discount on entry, if you will, but there's a generation of value there. And then there's the leasing models. Now that spread is really how we outperform.
Okay.
And we've built a portfolio of £250 million, there or thereabouts, in the last 5 years. And everything outperforms.
Yeah.
And that's great. And we do have some ASTs, we have private tenancies, we have a mix. It's not exclusive, because it's different to the subject to the building. Some are a mix.
Yeah.
But so we're not, we don't sacrifice versatility because we are bound by this sort of singular model. That's not the business at all.
But that's suited the Mayfair scenario.
It's suited the Mayfair scenario, but Mayfair, you've got hedge funds and oil companies and that sort of stuff. And it's...
So just with that letting model, so if, for example, using the example KPMG, don't have anybody in London that week, is someone still paying like a base rate for it? So they have like a minimum payment, but then if it's occupied...
Our lease is to a corporate. So the way we have a lease format, so we have a guaranteed income. There's just a small component. We have long-term leases with corporations. That's our model.
And then the company will make their upside on that. Yeah. Understood.
And we look at their booking data and all the rest of it, so we know what's going and all that sort of stuff.
Okay, and that helps you deliver a stronger yield.
Yeah, well, the yield comes from the discount on the capital values.
True.
In tandem with and it's the spread that gives you the power.
Yeah.
Because you're outperforming on two fronts, which compounded makes quite a big difference.
And that's the thing about property deals. A lot of people focus on is that the one thing you can't change in a property deal is the price you paid for it.
No, exactly. And look, we get clients coming to us. We've grown a bit over the last couple of years, and clients are coming to us and saying, new clients. For example, we look after a Singaporean family office that came on board last year, and their property, they bought a property for a price in Midtown, and no one can do anything about that. And that they bought it for, I would say, like a fine price. But I sat down with them for dinner, I don't know, 18 months ago, a year ago, when this dialogue started, and they were saying, well, we don't think it's performing very well. How would you go about enhancing its performance? And it wasn't performing very well. And there was a lot of low-hanging fruit, because actually it wasn't being managed. I think it was being managed well in terms of repairs and maintenance and
the basics.
But that's not the job that we do. The job of art is to generate income and maximize revenue, protect values going forward, future-proof. That's thinking like an investor. And again, there's like this cultural dislocation in the UK and in London, where people that do management jobs do not think like investors. People that think like investors do not think like managers. The investors are incentivized by a transaction. The managers are incentivized by their management fee to do a day-to-day churn of making sure taps are working properly. The investor doesn't care about the tap. They care about the maintenance of the overall property and how that helps it perform and retain value. So we sort of bridge a gap, which is, we think through the whole life cycle, we're thinking about how do we deliver the best service and maintain and preserve that asset to best we can, while limiting unnecessary expenses and driving income.
Yeah.
And if I can enter at the right point, drive the income, maintain it really well, and not waste money on things that management companies are not incentivized by net income. They're just incentivized to earn their fee and do a job, which is so nuts, because they spend without any due consideration of whether or not whether that's the best cost, whether that's worthwhile expenditure, whether
without
that's
a long-term view either.
No long-term view whatsoever. So that, I think, is where we've... Look, it's not rocket science, but it's underserviced. So I think we just do a really good job with the right values and the knowledge we've accrued over myself 15, 16 years in the London markets. And then just to, without wishing to go off too much, but you said a minute ago, I think it's really important, businesses and the individuals that run them are really honest about what their skill sets are and and as importantly, what they are not.
Definitely.
And I think, like you said, in this process, there are a number of stages of risk. And some of those I'm really good at managing. Some of them I'm not very good at managing, which is why the guy that helps me manage the projects did Claridge's because I'm not going to pretend to my clients that I have 15 years of experience in that as well. I don't.
Yeah.
But what I am good at, and what is a natural skill set, is the relationship side of things, working out who's good at what and combining them in a collaborative force to work together to deliver something that has the right values at its heart, which people like to work
It's like
together
that
on.
old adage, what is the ultimate, what's the property developer, and they say it's like a conductor, in an orchestra.
Yeah.
So,
Yes.
but you know a bit about all those different pieces, but you got to get everything working perfectly.
Yes.
But you'll never be as good as that pianist or that.
And you know enough. You need to know enough not to have the wool pulled over your eyes, and that you have to be honest with yourself about as well. But I think I'm quite comfortable at not having to pretend that I know all the answers, because now also what fortunately as well, what gives you what gives me and us that comfort is the track record's really strong.
Yeah. And Jamie, it's working. I mean, 250 million in 6 years.
Yeah, 5, I think that one. Yeah,
5. I mean, so we talked about Mayfair. How many other?
we've got 5 developments. We've got a big development in East London. We've got really what we've done is we sort of spread east to west. We literally have just moved along the river, just by almost chance. But we have East London, Midtown, the city. So it went East London, City, Midtown, West End.
Okay.
That's kind of what we've done, and they're a mix. We've got big leasehold asset. We much prefer freeholds, but that was the one we started by getting involved in, and because of the leasehold nature, it's had its limitations. But we now run the development on behalf of the freeholder as well, and that's a good example.
Sure.
We did that to benefit the client, no other reason, so that we could have more control in the overall operation of the building they own the majority of. It's not a real revenue spinner for us, but it was in the best interest of the client to take on that additional workload for a third party that has no relationship to them, so that I could do a better job of preserving and running their asset because I have more control. And it's their interests I'm largely here to protect. So as much as the freeholder and all the rest of it, but they're quite aligned. So that's where we.
So how many units is that?
So about 160, I think.
160. Yeah. Okay, it's still quite a machine to run.
Yeah, it is. And
so you have an estate manager?
Yeah, I have an estate manager, I have an operations manager, finance, senior management are basically FD.
Yeah.
Ops manager, estate manager. They're kind of the three that.
Yeah, the FD will mostly report to the investors.
FD reports to me really, and I report to the investors.
And you report to the investors.
Yeah, because that
keeping that personal relationship.
Yeah, and I think they don't want. They're very busy people. They don't. One point of contact's a good thing, so I just keep it. And that's
is it on WhatsApp?
Sometimes, but it's mostly. I try and keep things quite sort of formal, and there's not too much back and forth. So we have a really standardised reporting structure it's standardised, but we tailor it to each client. So we have a format. This is what we do. How much do you want it? How do you want it to look? What's the key information you want to know? Right, you're going to get that at these intervals every time.
How much do you want to know as well?
How much do you want to know? And there's always we always give a little bit more information than required, because I think it also does a job for us, because if they have enough information, then there's less questions to be asked. Basically, it's like, there's all the information. This is how it's going.
So what's next for Anglo Fortune?
That's something I've been giving an awful lot of thought to lately. Maybe it's probably to give the full picture actually helps looking backwards a little bit to answer the question on what we're going to do going forward. So we, and I think these are important points also to explain about us. So I'm sure everyone's aware, but the last few years have not been that straightforward. From obviously COVID and then inflation.
Last 6 years.
Yeah, it's been messy
since the EU referendum.
Yes, I know, it seems like it's never ending. There's something every year. We used to be when we set up, we outsourced a lot of what we did, and because the markets weren't that conducive to going and expanding rapidly through the deployment of new capital, the opportunity that sat within that set of circumstances was to internalize a lot of our efforts. So what we did was right people on the bus, critical piece of growing and running the business and providing the service we want to provide. So it was about figuring out who sits where and why and who the right person is for that role. It was also about professionalizing and maturing systems, processes, operations. That was what we did. So rather than looking outwardly, yes, we've grown, but the route A was not just to grow. It was to say, well, how do we set up the basket that we've built and reinforce it and grow it so that we can catch more going forward? So let's not chase our tail. Let's lose this opportunity to build a really, really good business that can take on more when the markets change and when there's more momentum and our clients or new clients want to do more. So COVID was obviously really interesting. We actually did very well through COVID, and I put that down to the relationships we have with our tenants. When COVID hit, we went out and we sat down with all of them straight away and said,
with the social distancing.
Yeah. Sat down with them all 2 meters apart, exactly, and basically said, "This is nobody's fault. You couldn't have planned for this, and we couldn't have planned for this. So let's not strong arm. How do we weather the storm together? Let's stay on the same team." And because of that approach, that we actually got paid back by our, when I say paid back, we did some, there was some deferrals of some income and thing to help with cash flow. They looked after us and paid us and ultimately our clients very promptly. And I honestly put that down to the fact that we were the first to go, "Hi, this isn't your fault. We know it's not our fault either. And we want to survive with you guys. So how do we do this together?" And I think everybody thought, I know their experiences with other landlords and partners was not the same. It was, how are you going to pay me my rent?
Okay.
And I think that framing, not only was it a great opportunity to build the relationships, but that helped us.
Because with no business travel.
No,
it's
really hard. It was really hard. But then back to the point I was making earlier, which is really important. We're not sort of hooked on this one model. So then it was private tenancies. We did a big promo with the NHS to support workers when they set up that emergency hospital at XL.
Yeah.
We were out working with the NHS to get staff in there, sometimes for free. Lots of people were in there for free.
Okay.
If you couldn't, it was like, broken eggs make an omelette. It was like, what can we do that at least has a positive impact if we can't generate outperforming returns? And that was a blip on the radar in terms of that ultimate timeline. But I think all of that actually presented an opportunity within itself. But yeah, so through that process, and then obviously through the last couple of years, we've had this opportunity to improve the business. Based on what I said earlier, that's a sort of overview, which we've done, which now leaves us in a position where what happens next? And quite excitingly, actually, my job now looks as one-dimensional as it's really looked since I set up the company, which is really interesting. But that is because we've got the right people in place. As I use the phrase, keeping their own houses in order, but people are given obviously a sector of the business a remit, and they're really, really good, and we've handpicked them over time. We didn't rush any of it. And what that means is now they've become established within the business. Everyone keeps their own house in order, which means it frees me up to do what ultimately my job is, which is to go and continue to grow the company.
And by finding new clients?
Find both.
New clients, new deals.
Yeah, and
we're chicken and the egg, isn't it?
Yeah, symbiotic.
Which one is it that you need first?
So circular. It's like, and the truth is that I've thought about that a lot as well, and there's no answer.
Yeah.
Because you can create and raise new capital by having the right deal.
Yeah.
And you can look after new capital by having done the right deal previously. Yeah. And they sort of interact.
But it is always the deal first.
Yeah, I think. It has to be in a way, but then we've got people coming to us now and saying, "Well, can you run our existing portfolio?" Which isn't actually a deal. And that's not.
And that's something you're open to, that you have to do. Yeah.
We stay quite focused on our core business and our core principles. So we're not going to veer off field and compete with, in sort of Pepper Cottage and that's not really what we do.
No.
But for clients that have bought, as last year, freehold property, Midtown, not being run very well. That's actually a point I should raise there. Wasn't being run very well because they weren't thinking like investors. I mentioned that point earlier. What I didn't give you was the numbers. In 4 months from taking over, this is August to December last year, we took over, we shifted to a corporate tenant model. We restructured the budgets and expenses and set up the building in some ways where we could essentially bring some costs down without compromising service. We improved net revenues within 4 months by 60%, 60.
Okay.
You shouldn't be able to do that. That's not because we're wizards. It's because someone is not running this like an investment. Sure. Someone is running this like a property to manage. So yes, and we could improve the revenues. We did. We improved the revenues, but that wasn't the lion's share of the growth. You can't do that spread again. We drove down. We changed the leasing model.
So it's really management, but with an investor's hat on.
Well, it's everything with an investor's hat on. Hence, it kind of goes back to that fund type mentality, which is, if we're in this for the life cycle of the investment, how do we think like they think?
Yeah.
How do we think that in their best interests through every piece of the journey?
Sure.
And that is, so I guess it's conducting all parts of the service that go through the life cycle of the property ownership, but thinking like that investor, what's in the best interest of the property,
Sure.
So that's sort of what we did. So they're very happy.
I'll bet.
And again, like that's not going to be totally repeatable, but yes, with people like that come to us and say, can you help us with our management? Yes, because also, like you said, it always comes with a deal. Well, actually, our hope and track record suggests that they then come and go, right, we're going to do more of this because this works now. It didn't work so well before, but it works now.
Sure.
And because it works now, we'd like to do this again, please. And guess who we'd like to look after all of it. And that's really, we love that sort of process of the proof being in the pudding, because it's a much warmer starting point than me sort of going out and being like, will you put money into this and take a bit of a chance on us? They've had the sort of experience, well, is an experience. They've had a direct experience with us that has generated that sort of change with this sort of service on the basis that you've done that. Why would you go anywhere else? And that's what's happened with our prior clients. From that complicated deal that we did at the start, they've come and said, anything we do it with you. And I take that extremely seriously, and I have enormous pride in it. So it makes my job great fun that I get to work for people like that.
Jamie, mate, you've done really well.
Thank you.
So anybody out there who either has a deal or has assets they'd like you to work your 60% magic on,
I can't.
They can
I'm not
find
sure
you
I can promise that every time.
Via your website?
Yeah, find via the website, which is anglofortune-am.com, and obviously can reach out to us directly. And I'm very happy to sort of offer advice where I can on related matters. But yeah, hopefully that gives you a bit of a background on me and the business.
Thank you very much, Jamie.
No, thank you so much for having me, Mads. It's really nice to see you.
Cheers, buddy.
Cheers.
This show is brought to you in partnership with the Better Home Company. The Better Home Company provides exceptional construction and aftercare for luxury projects across the UK and EU.